Who came with a fan club? So I was going to ask who is awake. It seems that you are much more than us. So we need to work a bit. So please sit down. Who came with a fan club? I mean, I didn't recognize the team. I didn't knew we could come with a team. So.
Morning, everyone. I'm Arvi De Vera from Union Digital Bank. We are one of 6 digital banks given a license.
Arvi has a fan club.
I know.
By the Philippine Central Bank, but the only one parented by a universal bank listed in the Philippine Stock Exchange, and that is Union Bank, which has over 40 years of experience in banking in the Philippines, and grandparented by the Aboitiz Group, which has over 100 years experience in the Philippines. It's a technomerate with interests in financial services, power, food, land, and it's really a 100-year-old startup. And Union Digital is actually the next evolution as we try to harness a lot of the data and a lot of the ecosystem information that we've been involved in over the past 100 years as a technomerate. Happy to be here and happy to share our insights. Thank you, everyone.
Thank you. First one, just to begin to show the first question. Facing market volatility, which is one of our crises right now. I mean, the past 2 years, part of it, we were work from home. In front of our computer, we can see in late 20, and the beginning 21, like a rise, like craziness of fintech valuation, like the sky has no limit. And suddenly, it has been another kind of record, like the bottom has no limit. So with this volatility, how does that impact your different businesses and globally speaking, the finance and fintech industry? And how do you manage to build more sustainable, more resilient business model? Harvey, in that turmoil situation, how do you define success and how do you build a resilient business model in the example of Filipinos and what you explained to us in the green room? I mean.
Well, first of all, you have to be very clear about what you're doing. And as a bank, we were very clear that it's not about having a sexy app. It's not about having millions of users that don't add value. It's about a balance sheet. And we're laser focused and clear that's about growing our loans and our deposits. So that as a business model is very clear, number one. Number two, you spoke about expenses. We grabbed and jumped at the digital bank license because we knew that the opportunity of a digital bank is really to be more a technology company and also a bank, and therefore bring the cost to serve down. And Robert talked a lot about the expenses. And in a digital bank, you can bring the cost to income ratio down to 20 to 30% versus a traditional bank that does 50 to 60%. So you can unlock a lot of value there. But to the other side of the equation, where are you going to get the revenue? And this is where you have to understand the context you're working in. We were very clear that we are part of a technomerate with deep ecosystem roots in different segments of the Philippine economy. It's a very, very geographically challenging economy and country, but we have very deep roots. We have a lot of data, a lot of engagement. So there's a lot of value we can unlock there. And so that for us was the first immediate focus. How do we increase revenues? We unlock the underserved values within our ecosystem, right? And then we control our expenses as well. But working within that ecosystem, right, and having a clear path that you know it's about growing the loan book because that's where the revenues come from. It doesn't come from payments. It doesn't come from sign-ups. Valuation is cute, but it's not profitability. And so with that, we've been able in just 4 months to grow our loan book to now an $80 million loan book. And we do have 1.7 million customers. And we do have a deposit base of $50 million. All because you're harnessing the power of an ecosystem and a platform within that ecosystem that can unlock value. The temptation of a lot of fintechs is to go outside and do the sexy stuff.
It was.
It is. But a balance sheet, and that sometimes the loan book, you know, that's sometimes when you look under the hood, that's not too sexy for most people, but that's what drives profitability. And that's what will eventually drive valuation. Many get lost in the sauce. Many fintechs have gotten lost in the sauce. And we've seen that's why 95, 99% of them fail. Because they're after the sign-ups, they're after the volumes, they're after the GTV. Where's the profitability? Where's the revenue? And if you look at digital banks that have been successful in the world, and there are only about 5% that are, you'll see a couple of trends. Number one, they're laser focused on mostly single product. And in our case, we've also focused on loans. Yes, we have a community strategy that executes that, but laser focused on loans because that will bring the revenue. Second, which most have taken for granted, is that a successful digital bank is successful when it has a strong partner or parent. And in our case, we're very clear about unlocking the values and the synergies within the parent Union Bank and within the ecosystem of the Aboitiz Group as well. JP Morgan is a great example. They killed their own digital bank, Fin, because they put up a digital bank that was geared towards high net worth individuals and that competed directly. It wasn't even a business model failure, it was a marketing failure. Sorry, JP Morgan. But it was a marketing failure because they decided to go after the same market instead of harnessing and saying, look, you have a lower cost to serve, how do I maximize that? But as a 100-year-old, we like to think of ourselves as a 100-year-old startup and the continuing evolution of that. We're very clear that within our group, there's so much value that we can lock. Even as a bank, we know that. Most banks don't capture the bottom 70% of their market. So with Union Digital, we're very clear that's the lowest hanging fruit. We can unlock a lot of value there, bring a lot of stakeholder and shareholder value, but also a lot of value to the community because these communities have been with us for the longest time. But now they have the opportunity to take a $50 loan, $20 loan, when previously where they were just doing payments, right? And that really increases our share of wallet within our ecosystem. So we're executing against that strategy. And you think about that, that's actually sustainable against any environment in that sense, because we're very clear about growing the revenue with the highest possible right to win, managing the expenses, and delivering on what a digital bank should do, 20-30% cost to income ratio. But more importantly, because it's an ecosystem, we're able to harness the data that's been within the ecosystem for the past 10, 15 years. And it's not that the bank could not service them, it's just that they could not do it at a profitable unit economic level. But now with the digital bank, you can unleash that value. So to really be sustainable in this kind of environment, a conglomerate has to be very aware of the different dots, different capabilities, and really maximize the synergies. If you work in terms of silos, you'll kill it. But if you work in terms of shareholder value and community value, you can actually milk it and maximize it. And that's the way to really execute, I think.
Are we launching a model based on the balance sheet when you have a raise of interest rate, a raise of inflation, so I assume also a raise in risk default? What are the advice and how do you see what other people should do when you have to manage a balance sheet today in that world?
Well, I'll go back to the ecosystem strategy which we engaged, no? And that's really also why we did that, because we saw that the lowest risk would be in the ecosystems we're already serving, where we have the more direct path to lending than standing out in the corner and just lending out loans, right? And then you have a collection problem. If you're lending within an ecosystem, you have an anchor community, an anchor steward in the ecosystem, and that's an easier way to penetrate and to obviously provide credit because you have more information, more data, rather than using payment data, which is really not a good proxy for someone's capacity and willingness to pay. But if you have his pension data, if you have his salary, that is a great anchor to start with and obviously limits the risk. And then you can properly price the risk, right? Because he has been your salaried payroll employee for X number of years, you know that you can give him a customized interest rate. Rather than standing out in the middle of the street and you wait for Robert to come in and you just give him the same interest rate you'd give anyone walking off the street. Very inappropriate, very anti-CX as well. So to summarize it, what we're saying is our way of de-risking that approach was really to start with the ecosystems we're embedded in, where we have all this data, we have all these anchor communities, we've been engaged in those communities, we know the value chain, when we know where to unlock the pieces. Because in some cases as well, when you're in an ecosystem and in a conglomerate with such a huge value chain, you can be an enabler in one and the other part of the conglomerate can make the value, right? It doesn't have to be siloed because you're thinking in terms of shareholder rather than simply a stakeholder, right? That wider view really allows us I guess, a more successful right to win, right? And really de-risks a lot of the execution challenges as well. Many get lost in the sauce about really trying to get the volume. And then the problems of collection, of bad loans happens. In our case, we've been lending to the ecosystem and it's still what we consider the lowest risk. We haven't even gone downstream to the highest risk. And the performance of our portfolio has shown that. So if you stick to where you're strong at and you focus your business model and sharpen the execution that way, you can really manage a lot of the risk there. And that's how you sustain the growth.
Thank you. With all those crises we have discussed and geopolitical issues, health issues, the world has changed for that. More difficult to travel, more difficult to recruit sometimes. We have also some benefits. Work from home can help. But how do you cope with that?
It requires also a different mindset, a humility, right? You talked about interoperability platforms. You know, for banking, we are becoming more and more invisible, right? And more embedded. And that really comes from the thinking that you will need banking but not banks in the future. And that the more invisible we are, but the more we enable in that environment that you guys just painted out, the more you have to be humble and think about, look, I don't have to do everything myself. It's about enabling interoperability. But banks normally think they want to do it all. So I think just to add on that, on top of the technology and the efficiency, you have to have a mindset that, look, I can unlock value in other ways. I don't have to be the forerunner. I don't have to be the person in front. I don't have to be the institution in front. If I'm enabling the pipes behind, similar to how Payoneer is doing it as well in terms of global payments, right? You are adding value to the ecosystems. You are adding interoperability. I mean, Payoneer is not exactly a brand that everyone knows about, but they power so many of the world payments, right? So the more invisible you are, right, the more relevant you can be to your ecosystems if you know exactly how to unlock that value. Because all of the things that Jason just spoke about really requires you to say, yeah, I might be the guy behind the guy, enabling those things, but I am bringing value to this community. So in this new age where you have everything is interconnected, everything is interoperable, you know, maybe it's good to leave, and as a bank that's very tough because we grew up thinking, oh, we have to be the front, but if you're empowered by Union Digital in the end and empowered by Union Bank, then you are adding value. So the more invisible you are in a world that's becoming more and more embedded, right, the more relevant you can become.
I mean, there's an element of responsibility that's very real, which I think we're all going to have to play a role in to just help the world to be better, right? So that's what I think that's something we really need to keep in mind. Humbleness, but also responsibility and accountability is something we should push forward with our tech.
Harvey, last question before you. We have 46 seconds now. When do you think the digital banks will overtake the traditional banking model in terms of usability and value, if any time, by the way?
Well, I think adoption is going to take a while. It's not the thinking that digital banks will all of a sudden overtake traditional banks and they'll disappear one day. No, there's a lot of use cases for traditional banking in terms of the branch model, which are still being used today. But the promise of the digital banks is really to bring down the cost to serve, and this allows you to tap the lower mass market, which is really the challenge in the Philippines and many places around the world. You're talking about an underserved community. In the Philippines alone, it's 60% that are underserved, underbanked. You know, and we talk about financial inclusion. We don't talk about payments or access to a bank account. We talk about access to credit. And if I can access credit at a lower amount, lower value, then I can give that farmer that loan that he needs at the appropriate price point, appropriate interest rate, and then he can grow his business. That's sustainable, and that's where the value is. Because it's not about banking the already banked. It's about bringing financial services to those who need it the most at an affordable level. Why shouldn't the farmers and these fishermen have the same access to financial technologies which we all have? It's a democratized financial world now. They should have the same best-in-class technologies available in their mobile phone, which is in everyone's hand.
Thank you. As you can see, time is up. It's red because we need to leave the stage now and let the show continue. Thank you very much. You can applaud all my panelists.
Thanks, guys.
And thank you very much to you. Wake up early for us.
Yeah.
Have a good day. Have a good show.